Hey, if you're thinking about buying a home in the New York City area, specifically Brooklyn, Queens, Long Island, Westchester County, and you're thinking about doing that in the next few months, then you're going to want to watch this video. We're going to talk about the home buying process from the beginning to the end and give you all the tips and tricks you need to know in order to get you from start to finish. Now, I've also got another video coming up. You're going to want to follow that up at the end, and that talks about strategy questions. Once you've got this overall idea of how to do it, we're going to talk about strategy questions. So stay tuned to the end. I'll link to that. But for now, let's get into the home buying process. Hey, if this is your first visit to the channel and you're looking to learn everything there is to know about the Midtown direct suburbs of New York City, then subscribe below and tap the notification bell so you can be the first to hear about the current market conditions here in New York and New Jersey. Hey, I'm Jeff. The team and I, we get calls every day from people just like you who are thinking about moving to one of New York City's amazing suburbs, and we love it. So whether you're moving in 7 days or 7 months, give us a call, shoot us a text, or send us an email so we can help you make an easy transition to the New York City area. So as I said, we're going to talk about the home buying process from the beginning to the end. In this video, it's going to be specific to New York. Now, if you're finding it in other places, it could be a similar process, so you might want to stay tuned and listen in. We did another video on New Jersey. That one's very specific to New Jersey. So if you're stumbling into this one and you saw the other one, but you're looking in New York, this might be more appropriate for you. Specifically around the offer process, slightly different in New York. So we'll talk about that. If you're thinking about buying in Brooklyn, Queens, Long Island, Westchester, definitely stick around because this will definitely help you figure out how we can get you through the process. So let's jump into it and get you from A to Z. The first thing to do obviously is start with the right team. That's probably why you're watching this video, so you can learn a little bit. But once you reach out to us, we can really get things moving. And the team isn't just your agent. Your agent has contacts that are in the legal field. Your agent has contacts that are in the mortgage community, home inspection business. So these are the three key players. And like I said before, the agent's going to sort of act as your quarterback to get you through this process. It's not like buying a package on Amazon that you're just going to get shipped to your door. There is some hard work. And the first step that is hard work for you is the loan pre-approval. So this is your second step. If we've talked about, finding the team, you've already been introduced, you get in touch with them. Hopefully it's us, but if not, we understand there's a lot of people out there, but hopefully it's us. The first people you're going to talk to next, or I should say the next people you're going to talk to is your loan originator, your bank originator, or your mortgage broker. And the reason why that's key is because we want to establish what your budget is. We talked about that in the 5 questions. What's your budget? But in this case, we really need to know what's the bank going to give. You might have your own budget that you think you can handle, but we also want to know what the bank's actually going to be willing to give you. Because if you can't get the size loan that you're anticipating, then obviously that's going to change the picture. So the bank's going to go through, ask you some questions, and they're going to ask you to submit your tax returns, probably 2 years worth. They're going to ask you for some current bank statements, and they're going to ask you for a few other things if you have like assets in, let's say stock market or whatever it is. They want to see what that picture is. But their main goal is to find out what your cash flow is in terms of income, how that stacks up on your W-2. If you've got other sources of income, they want to tally all that up so that they can establish what's called a debt to income ratio. We've talked about that in the previous video. And we look at this on a monthly gross basis. So we're dividing your annual salary by 12. And if there's any extras in there, like say you have some income from some rental properties, whatever that is, you add that in, divide by 12, and that's your monthly gross income. And on top of that, we're gonna have whatever the mortgage, principal, interest, if there's maintenance, if there's gonna be property taxes. So we tally all that up and then we divide it by the gross income. That gives us our debt to income ratio. So the bank probably wants to see somewhere around 30%. They can go higher than that, but you want to check with them and see what that lender works with. And sometimes they make exceptions. It all depends on certain things. Credit score is also going to come into play. They're going to do a credit evaluation on you, pull a hard credit on your history, and see if everything's looking good there. The higher the credit, the better the interest rate. That's also going to be something to think about. They're going to look at that, and then they're going to come back with a pre-approval letter. Once they've done all their homework on you, they feel confident, they're going to give you that pre-approval letter. Now, it is purely for pre-approval, but it's better than what's called a pre-qualification letter. Pre-qualification is sometimes they just do a quick call with you over the phone. If what you say is true, then this is how much we can lend. Pre-approval is a much more in-depth, where they take a look at those tax returns, the W-2s, and they say, okay, yeah, we feel confident. And again, going back to my other video where I talk about, is there a combination of people on the mortgage that's applying for the loan? Is that 2 people? Is that 1 person? Maybe it's 3 people. Maybe you're buying an investment property and there's 3 people in the pool. Whatever it is, they're going to look at that and see how it goes. So now that we have that pre-approval, we're ready to go. Because the other thing to keep in mind is, if we just started our search, we found someone we love, we go to make an offer, the listing agent says, okay, give me your pre-approval so I can share it with the sellers and make sure you're vetted and qualified. If you don't have that in hand, what's going to happen? You're going to probably miss out on that property. So you want to have that piece at the beginning, not in the middle. So once we feel comfortable, we know, okay, here's the budget, we can start setting up the parameters for the search. And when we do the search, you're probably going to have things in the background looking, but as agents, we're going to set you up on an automatic email updater that's going to send you homes in the areas you're looking in, and the price range you're looking in, and with the criteria you're looking at. And like I said in the last video, again, not to sound like a broken record here, comparing back to the last video, but we're going to look at things that are a little bit wider than that specific wish list, because we want to capture some of the outliers for you that might actually work, because that perfect home, while being perfect, quote unquote, it might not actually exist. So we want to find something that's the closest we can, and then you're either going to feel comfortable with that, or later on you'll plan to make some modifications to make it exactly what you want. But for this purpose, we have to think a little bit broader, keep that search wide open. So what happens after that? So now we're going to get you on some viewings and tours. And that can happen in 2 pieces, where probably the first go around we'll come out with you, we'll set up some home tours. Those might be one-on-one, those might be open houses. If it's a weekend, they're probably going to be open houses. You don't necessarily always have to go out with the agent. If there is an open house, you can certainly go on your own, check in with us in case it's by appointment or something like that, where we need to set up a specific time for you. Or there might not be an open house, we'll get you a private appointment with us and the agent. Or sometimes they just let us in, they have lock boxes, we can get the keys and get in and show you the place. It all depends on if someone's living in the home and they feel comfortable with strangers coming in with keys. If it's empty, sometimes they do give us those lock boxes. So everything is going to depend on what the situation of the home is. Now, how long are all these things going to take? So let's step back a little bit. Obviously, meeting the team, that can be a 2-hour process, that could be a 1 week. It all depends on how quickly you feel comfortable with getting comfortable with us and hiring us. So hopefully that can go quickly. You're watching these videos, getting to know us. Hopefully at this point you know, like, and trust us, or you're building that up over time as you watch other videos on the channel. Let's say that goes quickly. You've reached out, you're ready to go. Now the loan pre-approval process can go as short as a couple days, or it can take as long as a week. The reason why that's so wide is because it all depends on how fast you can get your documents to the loan officer. You can have that initial conversation with them, but then if things get busy with work or whatever it is, life happens, and you forget to send them the documents, then they're just sitting around waiting for that and working on other people's cases. So you want to basically, after this video, prepare those documents, get them ready so you're ready to send that off. So that can be anywhere from like 2 to 3 days all the way to a week or 2, depending on your schedule and how fast you're ready to go. Now the search that we were just talking about, that's the part that's the biggest variable. You could see a home the first weekend, say, I love this home, I want to make an offer. It can be over in a couple days, and we'll make the offer and get that going. But most of the time, that's not what happens. It might take a couple weeks, it might take a couple months. It all depends on the inventory that's coming up and how fast we can get you in that apartment, or sorry, I should say house. Most of the places in the suburbs are houses. Or maybe it's a townhouse. There are obviously condos in the suburbs, but anyways, yeah, that can vary dramatically. So this can be, a short little blip, or it could be a long blip. And this format here that I'm, overlaying this chart is sort of like a Gantt chart. It's sort of a timeline, first priorities, and then we're stepping down from there. Okay, so we've done this search. We found a home that you're really interested in. We want to make an offer. What do we do? So we're going to go through and we're going to utilize some of those tools that we did at the beginning, that pre-approval letter that was so important. We're going to get that into the offer. It's going to be part of our package of documents. And then we're going to go through and we're going to make a letter to the seller that says, these are the buyers, they're very interested in making an offer. I've had them put together a submit form or an offer form that we'll go through. We'll put all your assets and liabilities, your income, basically giving the seller a full sort of history on you, sort of a full package. And then we're going to submit that as a non-binding subject to contract offer. And this is where I was saying it's a little bit different other places. So for New York, everything's contingent upon the contract. And we want to say that specifically because we don't want that offer to be held as something that's like legally binding. So we're going to say to them, look, this is what we're thinking of, but it's all subject to what we put in the contract. And when we get to the contract phase, we're going to get into the legalities with the attorneys, and they can kind of go through the legalese and put everything down perfectly. But for the offer, we're going to call it, basically it's kind of like a letter of intent, so to speak. So we intend to purchase this, this is our price, and these are our terms. So for terms, we're going to talk about how quickly we can close, is there financing that's part of the package, are we going to include a home inspection before or after? We'll get into that a little bit more. And how much down payment, and any other small terms that we're worried about. Small things in New York could be something like, do we want to give the seller flexibility when they're getting out of their home? They're kind of in that transition between their sale and maybe their next purchase or their next move. And sometimes a favorable thing to do is give them a little bit of flexibility. Maybe you can close and let them live there for a week or two. The attorneys don't like that. It's called a post-closing possession, because you're letting the seller possess the apartment for a little bit longer. They're almost like becoming your tenant for a couple weeks. The attorneys don't like that because it makes it more complicated. But for you, it could give you an advantage to make that offer more enticing for the seller, give them a little bit of flexibility. But again, it can become a headache for you later on if they kind of abuse that. Hopefully they don't, but like I said, you don't necessarily need to offer that, but it's just one of these little things we can kind of put in there as a sweetener. So that list of terms is all going to be in there. We can go through that, on a case-by-case basis, obviously. But that's going to be in the letter of intent. And again, that submit offer form that gives all the details of your financial history and basically your ability to close, just paired up with that pre-approval. We're going to put that in the letter and send it off. Now, assuming we go back and forth a little bit, that could take a day, that could take a few days, that could take a week. Maybe they love the offer, maybe they go with it right away. We don't know. Hopefully they love it. But if there is a back and forth, we settle on a number that everyone's comfortable with, and we move forward. Now, at that point, the agents, and now we're getting into the nitty-gritty here, but the agents are going to do what's called a deal sheet. So we've got an accepted offer between two parties. It's non-binding, it's subject to contract, and the agents are going to exchange all the information. These are the sellers, these are the buyers, these are the attorneys on either side. This is the management company of the building. If it's a house, that's not important. And all these little things are going to get put in the deal sheet. And then what happens is the listing agent usually sends that over to the seller's agent right away. So now we're starting to go from that offer period into the contract period. So in the contract period, the seller's attorney is going to get that deal sheet info, and they're going to take that and basically populate it into their standard contract that they like to use. Now, each attorney, and this is where, again, it differs from New Jersey, where each attorney is going to kind of set up their own a contract. If it's purchase agreement is the technical term, I guess you would say. And they're going to populate that in and then send that out to the buyer's attorney. Now, we've already, as part of that team that we talked about earlier, we've selected a buyer's attorney. We're going to set that up so that the buyer's attorney receives that contract. Now, if it's a condo, they're going to also send along hopefully some financial details on the condo, usually 1 to 2 years of financial statements. And then they're probably going to send the offering plan and any amendments. That's going to be the same for co-ops as well. And the reason why that is, you want your attorney to review that information, make sure everything looks good, that there's no sort of outstanding odd things that are, going to be worrisome for this particular purchase. So the attorney will review all that information as part of their due diligence, and they're also going to review obviously the contract to make sure that that's written properly, that they don't that they agree with everything. They're usually going to have a couple comments, and they'll send that back with comments, and they'll usually send another page which is called a buyer's attorney addendum or rider, that they call it, usually a rider, that'll have any of their standard comments that they like to add in that kind of protects the buyer and so on. The other thing they're going to review is the financing contingency, if that's part of the offer, and how that's worded. There's usually two parts to a financing contingency. There's the first part that gives you the time to get the commitment letter, and then there's the second part, which is harder to get the sellers to agree to, but there's a second part where you get a little bit of coverage between the commitment letter and the closing if the bank suddenly changes their mind, because that can happen. So then they're going to review the financing contingency, make sure that all works, see if it gives you enough time to get the loan commitment letter. Usually it's about 45 days. It depends on what you can negotiate. Sometimes the sellers are hard. They'll go for like 30 days. Sometimes you can get 45 or 60. It all depends on what we can get negotiated. The buyer's attorney is going to work on that for you. And they're going to get that to a point where they're comfortable with having you sign. Now, if part of your offer was a home inspection, and again, this is another difference between New Jersey and New York and other places, but generally in New York, most of my clients in the past have felt more comfortable spending a little bit of money on a home inspection before they sign the contract. The reason why that is you have no idea what kind of can of worms you're getting yourself into. So you kind of want to give yourself that assurance. It's a little bit of money, but you want to give yourself the the comfort to get into that property and move quickly. There is a little bit of risk to that because there could be another buyer that comes in and sweeps up the deal, and now you've spent a little bit of money and lost it. But if you're spending, $500,000, $1 million on a studio or a one bedroom at the smallest level, then you're going to want to give yourself that comfort. Usually you'll do that when the attorneys are reviewing the contract and sort of negotiating all those little items, because if you do find something, you can try and work it into the contract to say, okay, well, the seller's going to fix this, or actually we didn't like that, we're going to negotiate on the price a little bit, we're going to work those things out. So that's where the home buying, the home inspection ahead of time before you sign the contract can be a little bit helpful. Now, if it's a townhouse, it's a bigger deal. You want to lock that in maybe before you spend the money, because at that point the inspection is going to become a lot bigger. It's going to entail the roof, the basement, everything. Whereas if it's apartment, the inspector is just going to come in and do a quick scan, make sure there's nothing outstanding, can check the appliances and so on. So when you're looking at a townhouse, you might want to build it into the deal so that you can lock that thing up before you spend more money, because home inspection on a townhouse maybe 50% to a little bit, maybe almost 200% more. We're talking 500 or 400 for an apartment, maybe 1,000 for a townhouse. So that could get costly. You want to build that into the contract, and then if there's anything wrong, you could negotiate that on the contract. So everything looks good with the contract. The buyer's attorney says that looks great, I want you to go ahead and sign it, send it back to me. Once that's done, they're going to send that over to the seller's attorney along with your deposit. And if the seller's happy and they're looking to close out the deal, they're going to sign that. It's considered countersigned and send it back to you. Now, once your attorney receives that back, you've now got a contract that's been fully signed and ready to go. And now we're ready to move into the financing phase and the board package phase. Board package is specific to a condo or a co-op. We'll talk about that next. But first, we're going to make sure that we lock in the rate. We're going to move that forward with the bank, get that going. We don't want to necessarily lock it in too early because we could start incurring fees to do rate lock extensions. So we're probably going to want to lock it in right when the contract's done. We're going to submit that signed contract to the bank, get them going on the final loan application. If there's any other pieces of information the bank needs, you're going to want to submit that, get that going as soon as possible. The other piece that we're going to talk about in terms of the loan application process is getting the bank started on the appraisal. So they're going to send over an appraisal agent to inspect the home. They'll do some measuring. They'll find the comps in the area that apply to that size property and so on and so forth. Make sure the home is being purchased at a reasonable price in their terms. And when the appraiser's done, they're going to send over to the bank their appraisal price. Now, assuming that matches the purchase price, the bank's fine. They can move through the underwriting. Now we're going to talk about the board package phase. Now, this is really only specific to condos and co-ops, more so to co-ops because they can be a little bit trickier to apply to. You're going to have a full financial package that goes into the board. There's going to be lots of questions to answer, go through that, and submit copies of your tax return, so on. Us as agents, we're going to help you get that done and across the table so that you can finalize that application. Part of that's going to be the commitment letter from the bank, so that's why we started with the bank stuff. Once we get that commitment letter, hopefully we've got the rest of the package ready to go. We can submit that to the co-op. Now, the other piece of the co-op that they're going to do is a interview with you. There'll be usually the board, or a board will have like a subcommittee that will interview you and get comfortable with you being a new applicant to their building. Now, it sounds weird, but that is where the co-ops are a little bit different. They have that extra level of screening that they get to do that most condos don't really get into. So the condos, on the other side of it, they might have a board package, but it's going to be very basic. It could be detailed, but it's not going to get into a full interview and that kind of stuff. It's really going to be around the financing side of things and how that's looking. So assuming everything's good, we submit that. Once we get the approval from the board, they're going to send us back the right of first refusal. Now, they need to give us that because as a condo or a co-op, they have the right to refuse that sale. And assuming they pass that along, then you can make and go ahead with the purchase. So we've got that done. We're ready to go. We just need to go back to the bank and say, hey guys, are you ready? We've got the approval. We're ready to go. We can move this through to the closing. The bank, you're going to want to get the cleared to close, and in order to do that, you're going to have to send them any additional documents that they need, that, you know, maybe updated bank statements, updated paychecks, so on, to get that so that they're ready to go. There's no outstanding items. They're going to get you cleared to close, and then we move on to the closing process. Once we're ready for the closing process, the lawyers, the title people, everybody's working together. They say, yep, I can close on X date. Let's set that in the calendar at 2 o'clock. We'll meet at my office. Everyone comes. Now, in these days, some of these people that are normally going to come to the closing table, they can do their work remotely, and they'll submit documents ahead of time and FedEx them where they need to be. So sometimes when you get to the closing table, there's only a couple people there. Now, you're gonna set a date, like I said, and on that date or the day before, we're gonna try and do a walkthrough of the home, make sure nothing's happened, no damage, no fires, took the house away, whatever it is. We want to make sure that it's actually there, you're buying it, and you're not buying just a piece of dirt that, you know, vanished. So we do that ahead of time. If there is any damage that we want to be aware of, we'll bring that to the closing table and we'll say, okay, Mr. Seller, actually, you know, when you were moving out, you scratched the wall up here. I'd like for you to either fix that tonight, or, you know, we're going to do a little closing credit so I can hire a painter or a handyman to deal with that tomorrow or in the coming days and weeks. Let's say all that goes well, sign all the documents, sign the mortgage, sign all the title stuff, and the closing happens. It's completed. Everyone passes the checks around. Everyone's settled. You're going to bring that remaining 10%. If, let's say it's a 20% down purchase, 10% went into the escrow at the beginning and 10% is coming at the closing. You're also going to bring a check for any closing fees that the bank might be charging, mortgage recording tax. If it's above $1 million in New Jersey, there's a mansion tax, title insurance. All these little things add up to extra fees above and beyond the down payment. So if you're 20% down of the purchase price, you're probably going to want to assume like 3-4% to be safe of the purchase price for closing costs. So we didn't talk about that at the beginning, apologies, but that's going to come at the end as well, so you'll pay that, and you're going to have to pay your attorney at that point. Now, the good thing is the agents, they're all paid by the seller typically, and I say typically because if it's an MLS transaction where it's two brokers on the same MLS, they have a co-broke agreement within that MLS, and the seller pays the fees. Now, if it's not on the MLS, let's say it's a for sale by owner, you probably heard the term FSBO, then in that case, we're going to have to pre-agree something with the seller. Either the seller pays the fee, there's no listing agent, so the seller's going to pay a fee to the buyer's agent, or the seller says, no, I'm giving you a great deal, I'm not paying you any fees, then we have to pre-agree something on the side amongst ourselves. That does happen from time to time, but not that often. Most of the time the seller is going to be happy that you brought them a buyer, and they're going to pay that fee at the closing table. So everyone's delivered the checks, and here comes the keys. We got those ready to hand off, and at that point the deal is complete. The ownership has changed hands. The title people are going to go away and they're going to file those documents, so you might not see it online or at your county clerk's office that day, but within time they'll file those papers, and the ownership, the title, the deed is transferred to you. At that point you can go over that night and check out the home. It's yours to move in and get ready and prepare for the next steps. So I hope that was a helpful process. I just want to point out these are sort of key responsibilities that line up with each. I'll put a link in the description so you can look at this chart and feel free to make comments. These key responsibilities line up below, so you'll see a lot of the front end work is with you and the bank, then you and the agent finding the home, the agent makes the offer, and you and the attorney work on the contract, get that settled. Obviously the agent doesn't disappear at that point. They're the ones sort of like quarterbacking. Buyers with the assistance of the agent are going to work on that financing and home inspection, and at the end you and the attorney, you the buyer and the attorney, are in lockstep to try and close everything out. Hey, so I hope you found that helpful, talking about the purchase process in New York. Now I've got another video, I'm going to link it right after this, coming up. Look for the end screen, where we talk about the 5 questions you need to know to strategize properly, to get yourself from start to finish. Everything we just talked about, but we're going to talk about the strategy side of it and how we get things going. I'll see you over there.